Zealand's builders have gone quieter than Eden Park at a Blues game in the mid-2000s. Residential building is at a 10-year low. Consents still 30% below their peak. And the pipeline looks emptier than the pie warmer at 4 a.m. after a night out on Courtney Place. And yet, less supply in this country always means one thing: prices are going up. Jarrod Kerr is here to explain why this so-called death spiral might just be the start of another property boom. He's next.
Financial freedom faster. Financial freedom faster.
If you'd rather make money than sit there sulking while your neighbours cash in and you're still glued to Trade Me like it's some tragic pastime, smash that subscribe button. In 2025, more Kiwis are getting their property smarts from this show than anywhere else. Be the one ahead of the pack before your mates cotton on. Jarrod, let's be blunt. Has the construction industry basically collapsed?
No, it hasn't collapsed, but we've seen quite a downturn in construction, particularly resi, throughout the country. It follows a couple of years of bad recession, really, and a central bank which has been hell bent on putting us into recession and causing a large correction in the housing market. So it'll take some time to turn around. There are positives within this. I've been chatting to developers who are saying to me, there's all the normal frustrations of getting stuff set up, but right here, right now, it's actually a good time to build because they can get access to whatever contract work they need, whatever subbies, that they're all there waiting to go. So, those that are out there doing stuff, they're finding it a lot easier, and some of the cost pressure is coming out of that industry as well.
But we hear that the red tape holds people up.
Absolutely. Yeah. And that's something that, the government's tackling, trying to. It's something that we could be doing a much better job at the council level as well to get stuff done, get stuff up and running. We do need more houses. We do need more infrastructure. So anything that we can do to cut that red tape, should be done.
If consents are down by 30% from their highs, is there a big supply crunch coming in the future?
Good question. What we've seen over the last few years is that supply is actually sort of kept up with demand, which is more demand coming off. So our population growth's come off quite a bit, but we are building, and that demand supply imbalance hasn't gotten worse, which is good. What we, I think, do need to think about going forward is that, we do see these spikes in population and we do need to be better at responding and building more during those times. As you say, the construction industry at the moment is quite light on work. That'll pick up again. But it's about being more nimble, not NIMBY, when it comes to this stuff.
Look, I'm a bit of a negative Nancy this morning. Sorry about that. But are we staring at the next rental crisis because nothing's being built while demand never stops?
What we're seeing is rents coming off, actually, at the moment, and that is a sign that the market's a bit better balanced in for rentals, at least. There's quite a lot of stock out there, and we're sort of putting that down to people not getting the price that they need or that they want, and then they put that dwelling, that they can't sell, up for rent. So rents peaked, I think, at about 4.5%, which was quite a run rate, and we're sort of heading into the low threes. So that, to me, points to a market which is a bit better balanced and not showing signs of, a bad shortage.
I think we are when it comes to house sales, having that big hangover. And I sold a house last year myself where you're not getting the lotto returns that you previously did. And that we have been conditioned for so long now that when we sell our house, it's going to be like winning lotto. And so when the market says that, in actual fact, it's well below it, maybe even below GV, it's a bit of a shock to the system. You're not as rich as what you thought you were.
No, and that's feeding through into household confidence and business confidence as well. There's a lot of small businesses out there that have a house attached to their business loan, right, to get the better lending rate. So, house prices not being as high as we think, does impact confidence, both households and businesses. So I think you bang on that is a big driver of the recession that we're going through at the moment.
Does the shortage guarantee house price growth, or is that too simplistic?
It is. It fundamentally, you'd think so. Yeah. But the biggest driver of house prices in this country and elsewhere is interest rates. Like that fundamental bit around the undersupply, it kind of exacerbates things. But the actual driver of the cycle is interest rates. So, we had interest rates slashed hard to, really record low levels, which coming out of COVID caused a huge spike in property prices. They then hiked hard, which caused a 20% correction. They're now easing again, and those lower rates will feed through and will ultimately cause the housing market to recover. But yeah, that kind of supply demand thing sort of sits in the background and can really exacerbate moves.
Is there any government fix here, or are they just pushing the problem out to the next election?
I think they are doing what they can, and I think they could be trying to do a little more. From my point of view, it's really about stimulating supply, particularly in areas where there are shortages of housing, particularly affordable housing. That's the key word. We are really good at building a $3 million house. Really good. We are hopeless at building a $500,000 house or unit. So that's what we need to focus on. Whatever red tape you can get rid of around higher density, affordable dwellings, then do it, please.
We discuss all the time the woes of first home buyers. It's never been a better time for a first home buyer to buy a house right now, is it? Even with these high prices.
Yeah, it's an easy thing to keep banging on about because you just feel that it's a simple news story and away you go. But actually, if you look at lending to first home buyers over the last 10 years, it's had this upward trend the whole time. And we are actually lending more to first home buyers than we are investors, which is just really unusual because, investors are such a larger part of the market. They are sidelined, and we're actually seeing more lending going to first home buyers. So I think there are a lot of first home buyers out there making use of falling interest rates in a very soft housing market while the investor remains shell shocked and on the sideline.
Probably going to throw you under a bus here a little bit. When was the last time first home buyers were exceeding investors?
Well, the data that I look back only goes, the Reserve Bank data on that only goes back to 2000 and I think it's 17 for some of it, and then some of it goes back to like 2010. So it hasn't been in that period, and we don't have. I don't think we've got the data going back much further than that.
Do investors care about the industry's health, or do they just see dollar signs from scarcity?
Oh, I think most of them have an interest in the health of the housing market, right? Most investors are in there for a long period. Right? They're not just in and out in a year speculating. We don't see a lot of that. To be fair, we see investors who are in it for the long haul. They should know better than anyone else that a better balanced housing market is a better balanced investment for them.
Now, I know I've got you to get out your crystal ball for this question, but with construction flatlining, when do prices finally start to take off again?
We're interested to see how things play out over the summer period, because interest rates, have been slashed, and it's starting to feed through now. And we've got a lot of mortgages coming up to be refixed in just the next few months. So they will be rolling off onto these lower, as you say, four plus, mortgage rates. That'll provide a bit of relief, but we're wondering if it'll actually provide a bit of stimulus. And if it does, then I think we'll start seeing, that housing market clear a bit better, get rid of some of that stock that's out there, and then things actually start to pick up into next year. So really interested to see how investors and owner-occupiers play over the next 6 months.
Jarrod Kerr, Chief Economist of Kiwibank, thank you once again for your time.
Pleasure. Thanks for having me on.